So hi guys, good evening. um I'm going to be making a video that is shorter than usual. I just finished recording the video for this week only to discover that I actually wasn't recording, or something happened and the recording kind of like went off. So my apologies. I'm just going to do a quick recap of what I've already done, um and hope it's going to be educational for you guys. Okay, so looking at gold, we can see that it created a new high, all-time high this week, which is further indication. We're looking at the weekly candle, weekly chart, which is further indication of gold in the strong bullish territory, right? So let me do it a little bit differently. I'm going to give you the review for this week, and then we'll review what happened last week. So the new week, which is going to be February 3rd to February 7th, what we're expecting is for gold to continue rising higher. Basically, there might be a sharp drop at the beginning of the week, and I should expect gold to continue going higher. We can see that gold has been supported by the 50 period moving average, right? Since it entered the bullish territory, which was on the 2nd of January, it has been supported by the 50 period moving average. Anytime it got to the 50 period moving average, it was rejected and continued its buy. So any sell-off that we'll see this week will be contained by the 50 period moving average. We expect it to be contained by the 50 period moving average and then continue with its buy. It is also important to note that this week that we're heading into will also be the week that the non-farm payroll is going to be released. That's the first non-farm payroll that is going to be released in President Trump's second term, so it's also something to keep note of. It's going to be something noteworthy, so let's just keep that at the back of our minds. So basically, analysis for the week, I expect it gold to continue buying, based on all this instability right now with President Trump's economic policies. I believe so many institutions and governments are still trying to wrap their head around it and still trying to know what it means. And based on that, safe haven currencies like gold will continue to push higher, because people will want to stick with what they know. Having said that, right, I would like us to quickly just look at the past week. The past week was 27th of January all the way to the 31st of January. Now, if you look at last week's analysis, you would actually see where I said that I expect, sorry, let me just do this. Yep, I expected a sharp drop from gold, and I expected a sharp drop from gold, but if we see a buy signal, we will resume our buy, and that is what exactly happened. This white line is where the market started on Monday 27th, and we can see there was that sharp dip. Now, around this period, we would have you can see that there's a buy signal around here. But for those of you that have been following my trading strategy for some time, you know that I typically do not buy on Mondays, and I typically do not enter trades on Mondays. I typically do not enter trades on Fridays, because they have a high failure rate. So looking at this would have been ignored since this happened early hours of Monday. Then if we keep going, we get to Tuesday the 28th of January 2025, and we can see a very good buy entry here. I'll use a horizontal line for that. You can see there was a buy entry here, and that went up well into 29th, which is, sorry, I'm having some hiccups today, sorry about that. The 29th, we can see there was another buy signal here, and this buy signal actually failed, and for those who entered would have lost something around 50 pips from the entry, 50 to 60 pips. My actual trade call, you would have lost 50 pips on that. Now typically what I do is that I enter the trade and I trail them, but that was not the call I gave for this week, because we're still in January, or then we were still in January, and January I tend to be more cautious, right? So we exited the trade somewhere around here for a profit of about 140 pips. But typically what I would have done, let me zoom out so that you can see that. Typically what I would have done is, when I enter the trade at this red line, this other red line would have been my stop loss, right? And then when market comes and creates a new low and then creates a high that is higher than the previous high, then I move my stop loss to the last low. So this is the first high that was created here. Let me use another red line for that. We had a high somewhere here, and then market came and created this low, which is very close to my entry, and then immediately market creates another high around this candle, which is above the previous high. I would move my stop loss, I would move my stop loss from here to the previous low. So my stop loss would have gone to the entry, and that's how I will keep trailing this trade. Let me zoom back in so that you can see it better. So my stop loss will come here and I keep trailing this trade. Now towards the close of market on Wednesday, we had another entry, which unfortunately we missed because it was quite late at night, and there was all the activity happened rather suddenly. That was why we missed that entry. But had we had the second entry, it would have given us another opportunity to enter, and if we had entered at that point and held all the way, so let me just zoom out again so that we can see that trade. The second entry here all the way to its highest point was about 500 pips, right? And if we held till the close of market, it would have been about 380 pips, right? And even still looking at it, we still had another entry on Friday. But like I said earlier, I do not trade on Mondays, I do not trade on Friday. But that Friday trade would have given us another 200 or more pips, right? So let me go back out so that we can see a lot clearly. So we had the first entry here. Let me make it a white line. First entry here, second entry here, and a potential. I call it potential because we missed it, and a third entry here. So the first entry, had we held it as I normally do, the first entry had a potential of about 700 pips to its highest point. The second entry, we are aware of that, the second entry failed. The third entry would have given us another 500 pips. So if you add that together, about 560 pips, 560 with 700, that's about 1,260 pips. If you minus the 60 pips from the loss, you are still up about 1,200 pips in just 1 week and placing 3 trades. And that's what we like to see. We don't want to make plenty trades. What we just want to do is make a few trades and make them count. We're not about making multiple trades, 10, 20 trades a week. No. Highest we try to make about between 3 to 5 trades a week, and make sure that those trades count. That's what matters. Accuracy and consistency. Accuracy and consistency. Accuracy and consistency. We don't want to make 20 trades and then hope that maybe 10 of them or 12 of them work out. No. If we are taking 5 trades, then at least 3 or 4 of them work out, and then sometimes maybe all 5 are going to be winners and it's done for the week. So basically that's it. I can't stress enough how effective this strategy is. If you like what you see, go ahead and subscribe to the channel. We'll be giving you more analysis like this. You can follow us on Telegram, the link will be there. You can follow us on WhatsApp, and you'll be getting your trade calls. Like I said, it's not going to be we're not going to be bombarding your phone with different messages, different signals, and no. Maximum of 5 calls a week, and the calls are going to be happening between Tuesday and Thursday, and they're going to be very effective and they're going to be very profitable. This week was a 1,000 pips week plus, although we missed one of the trades, but it was possible. And if you continue to trade with us, you get to understand and to master this setup, and you can even make the trade calls yourself. So that's all I have for this week. Thank you very much. Like I said, it was going to be a short week, a short video, because I'm having to do the video all over